You would think that if you have an exceptionally large amount of tax withholding to deposit with the IRS, that you might get a couple extra days to do it. But you would be wrong. In this video, I'm going to talk about the IRS's next day deposit rule, including some common misperceptions about it. First, let's talk about what the rule is. Under the IRS's $100,000 next day deposit rule, anytime a company's total deposit liability exceeds $100,000, all of that tax withholding has to be deposited with the IRS by the next business day. That's right, you have just one day to get all those funds together and get them over to the IRS. The first mistake that I encounter frequently with this rule is the misperception that it applies only to stock compensation or applies just one employee at a time or even just one award at a time. In fact, this rule is part of the IRS's general rules for depositing withholding taxes, and it applies to all compensation. Salary, bonuses, stock compensation, any payments that you make to your employees that are subject to tax withholding are also subject to this deposit requirement. And the rule applies on a cumulative basis. So it doesn't apply to just one employee at a time or just one award at a time or just one payment at a time. Anytime a company's total tax withholding, or anytime a company has accumulated tax withholding for the whole company in excess of $100,000, that triggers the rule, and all of that tax withholding has to be deposited with the IRS by the next business day. The second mistake that I encounter is a general misunderstanding of how it applies to stock compensation. In general, a company's deposit liability for stock compensation will accrue when the awards are subject to tax. So the same day that you are using to calculate the amount of income the employee recognizes and the amount of tax withholding you need to collect, that is the day that the company's deposit liability accrues. There are, however, two very important exceptions to this rule. The first is for non-qualified stock options, and the second is for restricted stock units. In both cases, the company's deposit liability accrues on the settlement date. The third mistake that I encounter is just hoping that the IRS won't notice that your deposits are late. In fact, this is an area that the IRS is very active about auditing. And if you have a late deposit, there's a pretty good chance you're going to get hit with a penalty notice. And in some cases, the penalties can be 6 or 7 figures. This is not an area where you want to skimp on compliance. And the fourth mistake that I encounter is thinking that the rule applies only to federal income tax. In fact, it applies to any taxes you need to withhold at the federal level. So that includes income tax, Social Security, and Medicare. In addition, some states have adopted their own next day deposit rules. So in some cases, it could also apply to state taxes. The NASPP webinar, How to Avoid Penalties for the IRS $100,000 Next Day Deposit Rule, is a fantastic resource for you on this topic. It covers all the technical ins and outs of the rule, plus offers some really practical strategies for ensuring that your tax deposits are timely. I hope you enjoyed my video today. If you did, please subscribe to our YouTube channel. That really helps us out, and you get notified when we post new videos. Win-win. Thanks for watching.